Welcome to the Deep Dive. Today, we're tackling a really pivotal question if you're looking at the Dubai property scene in 2025. Off-plan versus ready to move in. It's crucial.
Absolutely. This isn't just about picking a place. It's about understanding the smart money moves in this market right now.
Exactly. And this choice, it really impacts your capital, your timeline, your returns, everything.
It does. So our goal today is to really dig deep, go beyond the surface, and look at the real numbers and market data to help you.
Okay, so before we dive into the pros and cons, let's just quickly define our terms. Off-plan in Dubai 2025, what are we talking about?
Right. So off-plan means you're buying something that's, well, it's not built yet, or it's under construction. You're buying based on plans, maybe some fancy brochures, renderings. You see the vision.
Right, the developer's vision?
Exactly. And delivery is usually, say, 1 to 4 years down the line.
Got it. Buying the future, essentially.
You could put it that way, yeah.
And ready property? That's the opposite, I assume.
Precisely. Ready means it's built, finished. You can walk through it tomorrow if you want.
Okay.
Ready for you to move in or rent out, like immediately. Could be brand new from the developer, or it could be a resale.
Okay, crystal clear. Now, what's really striking is just how popular off-plan seems to be right now. The numbers are pretty big, aren't they?
They really are. Data from the Dubai Land Department for the first quarter of 2025 showed over 61% of all property deals were off-plan.
Wow, 61%. That's huge. What's driving that? Why are people so keen on buying something they can't even see yet?
Well, there are a few key drivers, but, a big one, probably the biggest one, is affordability.
Okay. How much cheaper are we talking?
Typically, you're looking at somewhere between 15 to 30% less than a similar ready property in the same area.
15 to 30%. That's significant. That's not pocket change.
Not at all. And it's not just the sticker price. It's also the payment plans. They're very flexible.
Right. How do they usually work?
Often, it's something like, say, a 10% reservation fee upfront.
Okay. Then maybe small monthly payments, like 1 or 2% while it's being built. And the bigger chunk comes due only when you get the keys at handover.
So it spreads the cost out, makes it more manageable.
Exactly. Much less daunting than a huge down payment on a ready property. And sometimes you even get post-handover plans.
Post-handover, so you keep paying after you move in.
Yeah, that's becoming more common. Imagine a new one-bed in JVC, maybe launching around 850,000 dirhams.
Okay.
With a 1% monthly plan, maybe even continuing after handover. It suddenly feels much more achievable for a lot of people.
I could see the appeal. Okay, so affordability, flexible payments. What's next? Why else go off plan?
The potential for capital appreciation. This is a big one for investors.
Right. The idea that the value goes up while it's being built.
Exactly. As the project progresses, maybe the area develops around it, the value of your unit can, hopefully increase quite a bit.
Is that actually happening? Are there examples? Oh, definitely. We've seen it. Look at Soba Heartland, for instance. People who bought off plan there back in, say, 2021.
Yeah.
By the time they got their keys in 2024, many saw the value jump by over 30%.
30%. Wow. That's serious growth before you even own it properly.
It is. Now, it's not guaranteed, obviously. Markets fluctuate.
Of course.
But that potential upside is a major draw.
Okay, beyond the financials, what about the actual properties? Are they different?
Yes, significantly. New developments in Dubai are really competitive. They have to be.
How so?
They're competing on design, on amenities, on innovation. You're getting the latest stuff.
Like what?
Well, think smart home tech becoming standard. Rooftop gyms that are like really high-end, amazing views, co-working spaces built right in.
Reflecting how people work now.
Exactly. EV charging stations are popping up more, high-spec interior finishes, things that, maybe weren't standard 5 years ago. They're selling a lifestyle.
A modern lifestyle package. And are developers throwing in any freebies to sweeten the deal in 2025?
Oh, yes. Incentives are definitely part of the game. It's competitive out there.
What kind of things?
We're seeing waived DLD fees quite often. That's the Dubai Land Department fee, usually 4% of the price.
That's a big saving.
It is. Also, zero agency commission is common on new launches.
Okay.
Sometimes free property management for the first year. That takes away some hassle.
Mm-hmm.
And even rental income guarantees for maybe 2 or 3 years.
Yeah.
You see that especially in branded places like The Address or Cavalli Tower, some Ellington projects too.
Rental guarantees?
Yeah.
On something not even built. That shows confidence.
It does. Huge confidence from the developer. But like any investment, there's always a flip side, right?
Right. There have to be risks with off-plan. What are the main ones?
I'd say the biggest concern for many buyers is delay. project delays.
How common is that?
It happens. Even with the big reputable developers, things can cause timelines to slip. A 12-month delay isn't unheard of in Dubai.
A whole year. That could really mess up plans.
Absolutely. If you plan to move in or start renting it out by a certain date, a year's delay is a major disruption.
Okay, delays. What else?
Well, there's the fact you have no immediate income.
Right. You're paying out, but nothing's coming in yet.
Exactly. If you're an investor looking for cash flow, your money is tied up for, 2, 3, maybe 4 years during construction. No rent coming in.
So your capital is illiquid for that whole time.
Precisely. It's a longer-term play.
And what about the market itself? Is there a risk the price could drop while you wait?
Yes, that's the market risk. It's always there. Dubai's market has been strong, but there's no crystal ball.
True.
If prices were to dip during construction, your property's value at handover might be less than you hoped, maybe even less than what ready properties are selling for at that time.
So you could end up paying more than it's worth on day one.
It's a possibility you have to consider. It depends on your entry price and market movements.
Okay, those are really important points on the risk guide. Let's flip the coin now. What about ready properties? What are the advantages there in 2025?
Well, the biggest, most obvious advantage is immediate use. It's right there in the name.
Ready to go.
Exactly. Need a home now, you can move in. Want rental income starting next month, you can find a tenant, no waiting, no construction uncertainty.
That immediacy must be a massive plus for many people.
It really is, especially if you're relocating or you're an investor focused on immediate returns. And the rental market is strong right now.
Can you give an example? What sort of returns are we seeing?
Sure. Take a typical one-bedroom apartment in, say, Dubai Marina, a popular area.
Right.
In 2025, that might rent for around 100,000, maybe 110,000 dirhams a year.
Okay.
If you bought that unit for, let's say, 1.3 million dirhams, your gross rental yield is pushing 8%.
8% gross yield. That's pretty attractive globally.
It's very good. And you start earning that almost straight away.
Okay, immediate income is key. What else makes ready properties appealing?
Transparency. What you see is what you get. Literally.
No surprises.
None. You can visit the actual unit, check the finishing quality, the view, the condition, see the building's facilities, understand the neighborhood vibe, even meet the neighbors, potentially.
You know exactly what you're buying, unlike relying on a brochure.
Precisely. It removes a lot of the guesswork. Plus, many ready properties are in established locations.
Mature communities.
Yeah, think places like Dubai Hills Estate, downtown, JLT, the Greens, areas where the infrastructure is already fully developed.
So schools, parks, shops.
All there. Clinics, restaurants, transport links. It makes them great for families or anyone wanting that convenient, settled lifestyle from day one.
You're buying into a working ecosystem. What about getting a mortgage? Is that easier for ready properties?
Generally, yes. Banks tend to feel more comfortable lending on completed assets. There's less perceived risk for them.
Okay.
So if you're a UAE resident, you can often get up to 80% financing on a ready property.
And the process?
Right.
Quicker.
Usually, yes. Mortgage approvals tend to be faster, and interest rates in 2025 are still, reasonably competitive, around 4.25 to maybe 4.99%, depending on your profile.
Okay, so easier financing, immediate use, transparency, established areas. Sounds good, but there must be downsides too.
Of course. Nothing's perfect. The main challenge with ready properties is usually the higher upfront cost.
Right, they generally cost more than off-plan.
Yes. Both the down payment needed and the total price are typically higher. Remember that Marina example, the 1.3 million ready unit.
Yeah.
If you'd bought a similar unit off-plan nearby a couple of years ago, it might have been closer to, say, 1.05 million.
So you're paying a premium for that certainty and immediate access.
Exactly. You pay for the now. Another potential issue is wear and tear, especially in older buildings.
Things breaking down.
Could be. Aging AC systems are a common one. Maybe the kitchen looks dated. Sometimes older designs have lower ceilings or less natural light compared to modern builds.
So potential maintenance costs and maybe not the latest style.
Right. And the design itself might not suit modern tastes. Older layouts sometimes have closed kitchens, smaller balconies, maybe not enough storage, things that newer off-plan units often address better.
Got it. And what about appreciation potential? Is it different for ready properties?
Generally, yes. You might not see the same rapid capital growth potential as with a well-chosen off-plan unit bought early in a developing area.
Why is that?
Well, much of the initial value uplift often happens during the construction phase for off-plan. With a ready property, appreciation tends to be more gradual, often linked to overall market trends and rental performance.
So the main return is more likely to be the rental income, not necessarily fast capital gains.
Often, yes, especially if you buy in a mature area or perhaps near a market peak, the rental yield becomes the more predictable part of your return.
Okay, this is really helpful, breaking down both sides. So for someone listening right now, trying to decide in 2025, how do they choose? Can we offer some guidance based on goals?
Definitely. It really boils down to your specific objectives and timeline. So, if your main goal is building long-term equity and you're not in a rush to move in or get rental income,
The patient investor.
exactly, then a carefully selected off-plan property could make sense, especially in areas with strong future growth potential.
Like where?
Think about places like Dubai South, leveraging the Expo legacy,
Yeah.
or the expansion happening in Soba Heartland too. Even new launches around Dubai Creek have that long-term promise.
Okay, so off plan for long-term growth if you can wait. What if someone needs income now?
Then a ready property is almost certainly the way to go. Look for units in high-demand rental areas.
Which areas are strong for rentals now?
Places like downtown Dubai, JVC is always popular, Business Bay, areas with a proven track record for attracting tenants and delivering solid yields.
Makes sense. Immediate need, immediate solution. What about people looking for a family home? A place to live?
For end users, for families, there may be two key questions to ask yourself. One, how soon do you actually need to move in? And two, what's more important, saving some money up front or having that immediate convenience of an established community?
Right. Affordability versus convenience, essentially.
Sort of. So if you're okay waiting a couple of years and you want potentially a lower purchase price or better payment terms, off-plan in a family-friendly development could work.
But if you need schools and parks ready now,
Then a completed home, a ready property in an established neighborhood is likely the smoother, less stressful path. You know what you're getting, and the lifestyle is already there.
that's really clear, tailored guidance. Love it. Before we wrap up, any final quick tips, things people absolutely must do?
Yes, a few crucial ones. First, if you do lean towards off-plan, research that developer thoroughly.
Don't just trust the glossy brochure.
Absolutely not. Look at their past projects. Did they deliver on time? What's the quality like? Talk to people who bought from them before, if you can.
Good advice. What else?
Always check the annual service charges for any property, ready or off-plan.
Yes, the ongoing fees.
They can range quite a bit, maybe 10 dirhams per square foot per year, maybe up to 30 or even more in high-end buildings. It significantly impacts your running costs.
Definitely need to factor that in.
And-
Anything else?
And finally, I'd say work with a good agent, someone licensed, experienced, who really understands the Dubai market.
Not just any agent.
No, someone who will give you unbiased advice based on your needs, not just push a particular project. They should know both off-plan and ready markets well.
Excellent practical tips. So, to quickly recap, off-plan offers potential savings, flexible payments, and maybe higher appreciation, but comes with risks like delays and no immediate income. Ready properties give you immediate use, transparency, and are often in established areas, but usually cost more upfront and might have less explosive growth potential.
That sums it up pretty well. The key is understanding those trade-offs.
Ultimately, it's a very personal decision, isn't it? It depends entirely on your goals, your finances, your risk tolerance in this dynamic Dubai market of 2025.
Exactly right. We hope this deep dive has given you a clearer framework, some solid points to consider, so you can make that choice with more confidence.
And if you want to explore this more or have specific questions about your own situation, you can always connect with us via the website www.ariaexpatrialestate.ae. We're also sharing insights, trends, and property tours pretty regularly on Instagram, Facebook, and TikTok. Just search for Aria Expat Real Estate.
Yeah, lots of useful content there.
And of course, please subscribe to the deep dive so you don't miss future analyses.
And maybe leave you with a final thought to mull over. As you weigh these options in Dubai right now, ask yourself, what resonates more with your current goals and your comfort level with risk? Is it the future potential, the excitement of growth in those developing areas? Or is it the stability, the tangible, immediate returns you can get from established neighborhoods today? Something to think about.